Hello, today is the 27th of February 2012. Before we get into today's chart, a quick little question called Missing Money. Three students check into a hotel and the cost was 30 grams of silver. Each student pays the clerk a 10-gram bar and they go to their room. Moments later, the clerk realized that he made an error and the rate was 25 grams and not 30. The clerk goes to the room and informs them of his mistake and hands them 5 1-gram coins. The students decide to take 1 gram each and give the 2 coins back as a tip for being honest. Each student paid 9 grams each after the refund, and the hotel clerk got 2 grams for 29 total. Where is the missing gram? 9 times 3 is 27. They each paid 9. They gave 2 back. It's 29. Something to think about. You might want to think outside the box. Let's go on to the quarter-day chart. The Fibonacci levels are from this low, the breakout lows, up towards this this high. Now, I don't know if I've ever said this before, and actually I do know, and that is when you break out, oftentimes that these Fibonacci levels will work out to significant areas. And what's more significant than within this range, which is basically, let me get it drawn in a little bit better, somewhere within here, which is at that exact top part of that range. Therefore, if it continues to break out, where would you expect these lines to go from this low to wherever the high happens to be? And trying to determine what the high might be, I would suggest this line would move somewhere up here. This line would move within this particular range. Therefore, you can calculate, okay, at what point will it come to, and then there you go. Oftentimes, I've also stated that when you're in a range, that the failed move can oftentimes come first, that would then suspect or start the rally. And in this situation here, we had this failed breakdown that started the most recent rally. Now we currently have this range that it has broken below. It's now back above it. But that's not always the case, especially when the range starts, too. If it's going to be a decent-sized range, we don't know how long it's going to be. It's pretty tight, extremely tight in comparison to this one in here. And last time we established this range, and the first move out of it was actually to the upside, right in here. And what that ended up doing was extending the range. The support never changed, but the resistance, of course, did. And there was multiple hits at the upper part of this with well, if you draw the line out more towards the first hit, you get a level in which was resistance on quite a few occasions before breaking out. And that's what we might be doing here, is developing this little range pattern. But again, it's very tight. And if that's the case, it could either stay within this type of range, and a lot of times these breakouts and breakdowns shouldn't be all that volatile, but a move up to 36 and change really isn't all that volatile, nor would a move back in the 34 and change range either, because those would be the more expected targets. And thank you for tuning in. Oh yeah, final thing is the bands. That's another reason too, and this post Fibonacci I talked about in the last video. We were up at this band in here. That was our level where we were pretty much at it, and now it's 59.4% from this band, and the upper band, which is above the chart, at 36.44. So when you have markets correcting through time, there's another method showing, yeah, now we're not overbought like people were saying back in here at the exact same price. We're not overbought like we were then. And the final point was, I was talking about this significant Fibonacci mark from the upside. When you count in this entire range from 33 to 34.40, and so far it's holding this level, and when you're holding it, maybe this is resistance, maybe it's going to stay as support, but until pretty much this level gets taken out, definitely you might want to start to see these bands, if it can make a clear break below this band, or when you see the band start to flatten out and go sideways like you wouldn't here, and at that point there, then you can determine on the breakdown, okay, yep, it's just resistance, and we're not going to be testing new lows, and vice versa when it breaks out to the upside. Thank you for tuning in.